Hello student, this is your subject financial accounting. In this subject, total you have 5 units and each unit will carry 10 marks. That means total 50 marks that you will appear in final exam for 50 marks. 30 marks that will be practical lab and 20 marks that will be internal assessment, okay, including attendance. Today here I will talk about unit number 1. Unit 1, that is theoretical framework. In this unit, there are 3 topics. First, accounting as an information system, the users of financial accounting information and their needs, qualitative characteristics of accounting information, functions, advantages and limitations of accounting, branches of accounting, cash and accrual basis. The first topic already you have done in class 11. Right? Next, second topic, that is the nature of financial accounting principles, that is basic concept and conventions, entity concept, money measurement concept, going concern concept, cost concept, realization concept, accrual, periodicity, consistency, prudence, materiality and full disclosures. So this is the second topic from unit 1. This one also you have done in class 11. Okay? Then, point number 3, that is financial accounting standards, that is accounting standards, concept, benefits, procedure for issuing continuing standards in India. So this part also you have done in class 11. So all total, unit 1 is not new for you all, right? Now, before I start to give the explanation, I want to say here that in this unit total 10 marks, okay, total 10 marks. Now you see here this 10 marks, how it will be distributed. See, marks distribution, that is unit number 1, total 10 marks. Now in this paper, for past course C, unit 1, marks, how it is distributed. 3 questions you will get for 1 marks, that is true false for past course, okay. Then for 2 marks, 2 question you will get, that will be optional, means 2 question will be given for 2 marks, you have to choose 1. Got it? Then 5 marks question you will get 2 questions, that is there will be option, you have to choose any one. Okay, there will be 2 questions for 5 marks. You have to choose 1. So all total 5 plus 2, 7, 7 plus 3, 10. This is for past course. And for honors, you will get 2 questions for 2 marks. That means 2 into 2, 4. Okay. And 6 marks question you will get. That will be option. 2 questions will be given. You have to choose 1 for 6 marks. That is 6. So 4 plus 6, 10. Okay. So this marks for past course and this marks for honors. Okay. Same paper, but for past course marks is like this and for honors marks is like this. Okay. Now I will start to give the explanation in this chapter 1 by 1 point. You try to understand, okay, already you know all these points, but again I will try to give the explanation. Unit 1, what is the name? Theoretical framework. Now question arises here, what is meant by theoretical framework? The theoretical framework of accounting refers to the set of frameworks, methods and assumptions used in the study and application of accounts in financial situations. The theory of accounts includes both the study of historical accounting methods as well as accounting practices which are used in any current financial applications. Okay, so this is the meaning of theoretical framework. Got it? Now, today, here some points I will explain. You try to understand. Okay? Okay, student. So first I will talk about the meaning of accounting. Okay? You know that Lucas Piccioli is considered to be the father of modern bookkeeping, right? The only recording of financial transaction in bookkeeping is not enough to achieve the commercial objectives, but also it is important to know the financial result. It is necessary that the recorded transaction is collected, classified and summarized. This work is done by accounting. After identifying the financial transaction through the basic accounting process, these are recorded properly in a systematic manner in the books. Right? To student, accounting is a systematic process of identifying, recording, measuring, classifying, verifying sum, raising interpreter and communicating financial information. It reveals profit or loss for a given period and the value and the nature of the firm assets and liabilities of owner's equity. Right? So see student, you must have seen a shopkeeper selling goods to earn profit. He or she sell goods for cash and on credit, purchase the goods from supplier, pay for electricity bill, telephone bill and wages to workers, etc. These all are basic business transaction involving money. A large number of such transactions take place daily. A businessman cannot remember all these transactions, so he therefore keeps a record of all these transactions in writing so that he can make use of this recorded information later on. The trader, means businessman, would like to know at the end of a period, which is generally 1 year, what he has earned during this period from the business. So he would also like to know the amount he has to pay to his supplier and the amount his customers have to pay to him. He can get various other information of this kind only if he maintains proper record of business transaction which have been taken place during the year. This is called, my dear students, bookkeeping. And this information needs to be recorded, classified and summarized in a systematic manner. It is called accounting. Okay? Now, definition of accounting. Definition of accounting, the popular definition. The meaning of accounting was given by the American Institute of Certified Public Accountants, short from AICPA, in 1961, when it defined accounting as accounting is the art of recording, classifying and summarizing in a significant manner and in terms of money, transaction and events which are in part at least of financial character and interpreting the results thereof. This is given the definition given by what is that? American Institute of Certified Public Accountants. One more definition, American Accounting Association in 1966, short from AAA, has defined accounting as accounting is the process of identifying, measuring and communicating economic information to permit informed judgments and decisions by users of the information. Okay, so this is the definition of what? Accounting. Now student, recording. Accounting is the art of recording. Recording means what? Recording means journal, subsidiary book. Subsidiary book means cash book. Subsidiary book means specialized book. Under subsidiary book, cash book, purchase book, sales book, purchase return book, sales return book, bills receivable book, bills payable book. All these things you have done in class 11, right? Then journal proper. So this is about recording. After recording, what you have to do? You have to do classify. Classify means ledger. Classifying means ledger, right? Then after classifying, you have to do summarize. Summarize means trial balance. So recording, classifying and summarizing up to this much is known as bookkeeping. And where bookkeeping ends, from there accounting starts. That means results and analysis. Results and analysis means you have to find out profit or loss of the business. For this you have to prepare trading account, profit and loss account and balance sheet. Balance sheet where you will get assets and liabilities. Then after preparing profit and loss account and balance sheet, this information you have to communicate to the different users. Who are the users? There are two types of users, internal users and external users. These users I will explain later on. Okay. So this is called what? This is called what? This is called accounting. Okay, got it? I hope student you understood the meaning of accounting and definition of accounting. So these things you already done in class 11 also, right? Simply you remember, for a businessman so many transactions it is not possible to remember, right? So for this they have to record all those business transactions. The record means recording. And recording means what? Recording means what? That is journal, subsidiary book and journal proper. Right? After recording all those business transactions, then you have to classify. Classify means ledger. Right? After classify, then you have to summarize. That is trial balance. Okay, the recording, classifying, summarizing is the works of bookkeeping. Okay, recording, classifying, summarizing up to this much is known as bookkeeping. After summarizing, then you have to analyze results. That is, you have to find out whether profit or loss of the business. That is called results or analysis. Okay, after find out the result, then this information you have to communicate to the different users of accounting. Users are two types. One is internal users and the other one is external users. The internal users and external users, this one I will give explanation in my next video. Okay. So this is about what? Accounting. Do you understood meaning of accounting, definition of accounting? Now I will talk about functions of accounting, then objectives of accounting. Now if I asked you what are the functions of accounting? So there are 6 functions of accounting. First is measurement, second is forecasting, third government regulation and taxation, fourth control, fifth comparison and evaluation, and sixth decision making. These are the functions of accounting. Measurement. What is meant by measurement here? Accounting measures past performance of the business entity and depicts its current financial position. Okay. Second, forecasting. Forecasting means accounting helps in forecasting future performance and financial position of the enterprise using past data. Financial position means what? Financial position means balance sheet. A performance means result. That is, you have to prepare trading account, profit and loss account, right? So this is the performance. Then third one is government regulation and taxation. Accounting provides necessary information to the government to exercise control as well as in collection of tax revenue. Okay. Then fourth one is control. Accounting also identifies weaknesses of the operational system. Operational system means day-to-day activities of the business and provides feedback regarding effectiveness of measures adopted to check such weaknesses. Point number 5, comparison and evaluation. Contingent liabilities. Contingent liabilities which play an important role in predicting, comparing and evaluating the financial results. And point number 6, decision making. Accounting provides relevant information to the different users of accounting to aid means help, rational decision making. So these all are the functions of accounting. Then third is objectives of accounting. What are the objectives of accounting? First, systematic recording of transactions. Systematic recording of transaction means by the help of bookkeeping. By the help of bookkeeping, keeping a record of business transactions. Human being has a limited learning power. So we can't remember all the things for a long time with accuracy. The most brilliant executive or manager cannot accurately remember the numerous amount of various transactions. Okay, so this is the first objective. Second objective, ascertainment of results, that is performance. That means you have to calculate profit or loss of the business. After recording of all the business transactions, then you will find out the profit or loss. This is called ascertainment of results or performance. Business is run to earn profits. Whether the business earned profit or incurred loss is ascertained by accounting by preparing profit and loss account. These are second objectives. Third objectives, ascertainment of financial position. Financial position means balance sheet. After find out profit or loss of the business, then you have to prepare what? Balance sheet. Right? Ascertainment of financial position. Accounting also aim at ascertaining the financial position. Financial position means balance sheet of the business concerned in the form of its assets and liabilities at the end of every accounting period. We know that balance sheet is a statement of assets and liabilities. Point number 4, providing information, or you can say providing accounting information to the various users. After preparing balance sheet, then this information, after preparing profit and loss account, after preparing trading account, after preparing profit and loss account, after preparing balance sheet, this information you have to communicate to the different users. Right? The point number 4, providing information to various users. That is the financial report. Accounting information is also required by different types of users, that is internal or external, who may need the same for decision making. And the last point, the objectives of accounting, to know the solvency position. To know the solvency position. Solvency position means cash flow statement. You already done in class 12, cash flow statement. Okay, so these all are the objectives of accounting. So today I explained the meaning of accounting, definition of accounting, functions of accounting, objectives of accounting. You try to understand all these points. Okay, so in my next video I'll try to give some more explanation, okay, from the same unit. Okay, then thank you for today.